Hi, I'm Ali Patterson. On this episode of Fintech Finance, we take a look at validation and data verification. For this, we speak with PCA Predict, Metro Bank, Invoice Cycle, and Iwoca. So firstly, I sent Douglas McKenzie to speak with Chris Boaz from PCA Predict to talk a little bit around some of the challenges they are noticing are happening in the financial services industry.
So we see user experience and digital transformation leading the agenda, and I think they will lead the agenda for quite a long time. Having that super slick, smooth user experience across all formats are going to be really important. We see that abandonment rates within the financial industry are a lot higher than they are amongst other industries, especially when compared to retail. So making sure that the customer is able to flow through the onboarding process as smoothly and as fast as possible is critical.
How does PCA Predict do that?
So it's all down to the technology that we provide, and then which is then backed up by the global data sources that we serve. So the technology, at the heart of the technology is the user, making the entire process as smooth as possible. It's typically just like a search engine that we're all used to using on a daily basis. So it's not out of the ordinary. And we just put that technology into the applications and the processes required by that financial industry.
I then went to speak with Iwoca to hear about some of the challenges that they face as an SME lender when it comes to verification of customers.
The challenges for us haven't changed. We're still seeing ourselves at the very beginning of our journey. We had a great year. We have grown significantly, but we still are in the grand scheme of things a small company. And we feel that the awareness that we have in the community of small businesses is still low, and banks are still dominating the industry. They still represent 80–90% of our lending volume to small businesses. It's still incredibly difficult to switch from a bank to another provider. And so the biggest challenge that we still face is to create this awareness. And I think we're getting better, because there's more and more companies like us that are drumming up the awareness of better services. But that remains the biggest challenge of small businesses really hearing about us and choosing a better financial provider for their business.
What lessons have you taken from the retail industry into the finance sector?
So just like in retail, within finance we see more and more people banking while on the move, whether that's via apps or mobile devices, especially in the millennial age group. So over half of millennials are using digital banking services. I think finance sector can probably learn from retail when they look at the omni-channel approach. And definitely nowadays we're all very used to channel swapping, whether that's using your mobile device, then your desktop at home, phone, instant messaging, for example.
Doug spoke more with PCA Predict about some of the ways that they can fix data quality issues for financial companies.
So a lot of that is down to the verified data sources that we use. So if you take address verification, for example, we use in-country source data, so data from the likes of Royal Mail, USPS in the US, Canada Post, for example. And then it's about that technology overlay, so making sure that the users and the customers can find their address in the fastest time possible. When they select their address, they know, and the finance companies know, that that's from a verified source. Human error still has a lot to play when you're inputting data. So if you don't have an address verification tool, there is always that risk of human error and having inaccurate data in your system.
What are the implications of having widespread human error within the financial services?
Well, really it's the application process, making sure that users can go through that process and the onboarding process really smoothly. If they manage to get through that process with inaccurate data, then obviously that causes an issue for the financial firms. They may have let people through the system that they maybe shouldn't have done, or following up with their customers afterwards is going to be harder, whether that's sending out information in the post, sending emails, and doing further checks.
In terms of the information that you then use on your customers, can you just talk me through how do you How do you validate who your customers are, and how do you use that information?
We make the process as simple as it possibly can get from a customer as well as partner perspective. So what we want is that someone who is already customer of a platform, our partner platform, that for them it's as easy as possible to go through the process. And that includes to make the onboarding to us as seamless as possible. So we would be using as much information that they have on their customers, so that the customer doesn't need to refill that information into unnecessary forms. We're using the same onboarding thresholds, if you want, and mechanisms that we're using for our own customers. But there's a lot of information already stored about the customer on our third-party partner platform, which they can automatically feed to us, so that the customer never feels that they have to give redundant information again to us that we could have sort of found at our partner platform. But the onboarding per se is following the same principles that our own customers have when they are onboarding directly with us.
Now, in terms of, obviously that must be a huge amount of data, especially as you're growing, that you're processing. How do you deal with things like data quality?
Well, we're trying to get high quality data about our customers, and therefore the quantity of it doesn't distort the quality of it. So when we're looking at customers or our customer data, one element, for example, are transactional data that they have with their banks, through their bank accounts. That's high quality data for us. Just adding more of that doesn't necessarily have an impact on its quality.
Do you find that by having not as much legacy, you're better equipped?
I would hope so. That we're much better equipped than some of these very, very, very large institutions that have also grown by acquisition. So they kind of have the problem that they're dealing with multiple legacy systems. So we can build our system from the outset to be GDPR compliant, and so I think it's easier for us, and it's even easier if you were to start a business today to sort of build it from the outset. But it's easier for us to make sure that we're compliant. It's still it's in a few months that it will become effective, and there's still some areas that I think are under discussion. So all of the guidelines haven't sort of been crystal clear yet, and so we still find it's of course a challenge to be 100% compliant, as not all of the guidelines are yet super clear. But in general, we're well placed as a technology company to be fully compliant to whatever guidelines will be finally cleared.
Can you just tell us a little bit around the customer onboarding process, but from an IT and a security perspective? What are some of the kind of KY things with things like knowing who they are, where they live, etc.?
It's a really good question. It's very topical given a lot of the cybercrime that we see and the fraud in the industry. So we've got a number of technology solutions. The first thing that we have to do is make sure that we do checks through our credit agencies to validate that these individuals live at the address that they've given. So we do address checks. We also do checks against the individual. So we do checks with CIRA, our AML and KYC checks, to make sure that we genuinely know the customer that we're engaging with, or the business if it's a business entity. And also we're quite unique in that we've actually got security and technologies in our stores that are equivalent to what airports have got. So we do physical security checks, we take pictures of people, we do validation checks against their documents, and it's all done and stored in the back office to make sure that we're really, really clear that the person that we're engaging with is the person that they're saying. But the beauty and the magic with Metro is not only do we get comfort that we're doing the right thing by our customers and discharging our regulatory accountabilities, we've then got a picture of our customers when they come into the stores again. And what that allows us to do is easily identify them, really seamlessly authenticate them, and give them a really personalised touch, because actually as someone approaches the counter, we know that it's Bob or Sue, because actually we've got a picture of these guys. So what we've been able to do is deliver a technology solution that allows us to have a really seamless onboarding experience, but actually makes it really personalised in terms of our ongoing servicing with those customers.
What's sort of your workflow with kind of verifying where people live? Can that be done from, say, just a passport, or do you actually need to have still the physical piece of paper, which, to be very frank, anyone can print off in Photoshop?
So we always ask for a number of pieces of information. We obviously want a particular document, whether that's a driving licence or a passport. We also want proof of address, whether that's bills, statements, mobile phone addresses, and then we check those against our databases and with the reference agencies that we go to make sure that all of that information hangs together, because it's absolutely crucial that we understand fully the customers that we're onboarding.
And with that in mind, one of the things that I think is always very cool with security is when you can do it without the customer even realising it, it becomes very, very seamless. What's your sort of approach to making sure that security doesn't hamper on the customer experience?
So when we're doing this through stores, we explain to the customer that by providing this information, it's a one and done. We won't be coming back asking for more information. It allows us to effectively deliver an open account with a working debit and credit card and a checkbook within 15 minutes, something that no one else in the UK market can do. And I suppose the really exciting thing is we're taking this experience, this unique experience of opening an account in 15 minutes, next year we're going to start to roll that into digital. So what we'll be able to do is reuse some of the technology that we've invested and actually start to apply it to our digital channel. And that's going to be great for us because it allows us to effectively appeal to a larger addressable market. If you want to come into a store, we can open an account for you in 15 minutes. If you want to open an account online because you don't want to come into store, we can do that as well. So we're starting to be able to play to a wider demographic.
We also wanted to hear about some of the ways that data can be used more efficiently.
Aside from address verification, what other data do you work with?
So we have verification services for email, phone and payment services as well. So address verification is our main data sets, but again, we are able to verify the data across those other contact points that I just mentioned. Some global leading financial services firms use that data, including JP Morgan, HSBC, Xero and Braintree.
What firms are leading the way in this department?
So a lot of fintech firms have got customer experience at the heart of their operations, which is fantastic to see. If I was to pick three, I'd say that TransferWise, KBC Ireland and Mortgage Gym would be at the top of my list.
How can this sheer scale of data really be utilised more efficiently by financial service firms?
We don't actually get a lot of data from banks. I think obviously as part of our process, customers will provide some bank data, and that's probably the only manual part to our process at the moment. I've mentioned PSD2 already. That's going to be huge for us, really, really huge. And that's assuming that banks pull their finger out and actually, get on board with it. I was at a fintech breakfast meeting probably a couple of weeks ago with a main bank. And they're nervous, and I get the reason that they're nervous. So obviously, they're concerned obviously from a security perspective and a regulatory perspective. Do customers perhaps really understand, kind of what they are doing when they tick that box to say, actually, you can have all of that data? I'd like to think they do, and most of our customers are very, very tech savvy and run great businesses. So, they should certainly, be aware of what they're doing. But that's, the golden nugget for us. Customers actually allowing us into all of that data. And once we, kind of are in there and can utilise it, the algorithm will just, it'll go forward leaps and bounds. We've got the capability of doing it. Like I said, there are already hundreds of data points that we use to make great decisions with businesses. And once we get hold of that, kind of big bank data, obviously we're probably not going to want 5 years of transactional data with banks, but certainly the last sort of 12 or 18 months, if we can tick a box and get hold of that, we can see where some of the challenges are. And almost to an extent as well, once our algorithm is in there, we can help customers, not from a these are the challenges that you've had over the last 6 months, but really looking forward and actually saying, well, in the next 6 or 12 months, we understand there's a seasonality to your business. We understand that, in March, you have a real cash flow issue. So actually what we're going to try and do is match our facility so, it doesn't keep you up at night. It's only going to be a huge win for us, to have access to that bank data. Like I said, when's it going to happen? God, I don't know. I think the target is January. But like I said, at this breakfast lunch, this fintech breakfast, a few weeks back, they don't really know what it's going to look like. Yeah, and it was a very, they had lots and lots of reasons as to why they didn't want to do it, and no real solutions to anything.
On the next episode of Fintech Finance, we take a look at core banking.